one thing that we've done at Sandstorm is it's not just for me, that we've done this for our entire senior management team. People have to own multiples of their annual salaries in terms of shares.
What I love to do is introduce the right people to the right people, assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, what's up guys? Jay Martin here, CEO of Cambridge House, and we are searching for our next investment opportunity. I'm now joined by Nolan Watson, the president and CEO of Sandstorm Gold Corp. How are you, Nolan?
Pretty good. How are you, Jay?
I'm very good. So anybody who's not familiar with Nolan, he's the founder of Sandstorm Gold, a company that he founded in 2008, gold royalty company, founded after departing a career with Wheaton Precious Metals, where at 26 years old, you were named the youngest CFO of a multi-billion-dollar company listed on the New York Stock Exchange. And Nolan's got all kinds of awards behind his name, from Canada's Top 40 Under 40, Ernst & Young Entrepreneur of the Year, recipient of the Queen's Diamond Jubilee Medal, which I'm very curious about, among many other things. But Nolan, it's awesome to have you on the show and get you in front of my audience, because I'd love to hear the Sandstorm story from you and introduce it to my audience or anybody who's not familiar. But before we jump into that, I wanted to talk to Nolan, the investor, to open this up so we can get to know you a little bit better. My investment strategy is always driven by the people steering the ship. And so I want to talk about your portfolio. You're an investor as well. And a lot of the conversations I'm having on the show right now are very focused on how to hedge our portfolios against currency debasement and the potential rise of inflation. So how are you doing that to start with your personal cash?
Yeah, I would say with my personal investment portfolio, one of the things that I am a big believer in is the fundamental devaluation of currencies over time. I really hold almost nothing in cash at any point in time. And I think right now is a particularly risky time to be investing if you're investing in anything that is not going to be inflation protected. And so I oversimplify a little bit. I literally just own only real assets, and I break it down into two broad categories. One is one that I know best, which is precious metals and a little bit of base metals. And the other is real estate. So I've got my portfolio currently invested about 35% in real estate, and the other 65% is precious metals with a small base metal component.
Okay. And when you look at the precious metals component of this, are you holding physical equities and all the way down the food chain from producers to explorers, or how does that break down?
Yeah, I own everything from producers, mining companies, to royalty companies, to explorers, to a little bit of bullion as well. What I would say though is that the makeup of where I am in that ladder has been changing over time. So when the real bull market started for precious metals, I had, it was mostly just my Sandstorm exposure plus a lot of junior companies. Junior companies tend to float fairly quickly, and they float fairly hard when they go up. And then when you get into the more mature start of the bull run, they're the riskiest things to hold, because if things do sort of peak out or top and start coming back down, the less liquid names get hit the hardest. And so I've been slowly shifting my position into more and more mature names and bigger companies. And I've been moving from exploration into development here over the last few months.
Okay, that's interesting. So then if you were to speculate, at what inning we would be in this current resource bull market, early stages, mid stages, approaching late stages, what are your thoughts?
Yeah, I would say still early to mid stages, except getting the timing right is not always that easy. When you're in the middle, it's easy to get it right. When you start getting closer to the end, it's really hard to pick exactly when the end's going to happen. It usually catches you by surprise. So I tend to move into more safe things earlier than the average person, just to make sure that I don't get caught in any downdrafts. And I do believe that operating companies with operating cash flow are the best to be invested in later stages, and those with less risks. So royalty companies, Sandstorm obviously being a royalty and streaming company, that's the type of thing that by the end of the cycle, I'll be fully invested in. My entire precious metals portfolio will be probably precious metal royalty companies by the end of the cycle.
Interesting. Okay, that's great perspective. Thank you for sharing that. I want to jump into Sandstorm now. So for anybody, Nolan, who's not familiar, maybe give us the 30-second commercial. What is Sandstorm Gold? When somebody purchases a share of Sandstorm, what are they buying?
Yeah, Sandstorm is a collection of streams and royalties. And so we've got over 200 streams and royalties right now, which means these companies, they go and they mine their mines. And at the end of every month or at the end of every quarter, they figure out how much revenue they had, and they owe a certain percentage to us. So if they owe us 2% of their revenue, at the end of the month, they cut us a check for 2% of the revenue they received. And so Sandstorm really is just a check collecting company, a cash flow company, if you will, that is getting cash flow from gold mines all around the world.
Okay, now talk to us about how that de-risks a portfolio, right? I understand the cash flow model. It's largely a great entry point for investors into the precious metal space because of the reduced risk profile. Can you touch on that a little bit?
Yeah, so mining is typically fraught with a lot of risks. You've got floods that can happen and fires and roadblocks and any number of hundreds or thousands of things that could possibly go wrong at a mine. And when those events happen, the mining company not only stops making money, they actually start losing money, right? So if someone blockades your road, you're still paying a large portion of your employees. You've still got a high burn rate for all of the equipment that you're leasing. And so mining is a business where you make money, and then you lose a tremendous amount of money for a short period of time while you have this exogenous event occurring. And then you go back to making a little bit of money. And so the equity investor who is investing in that cash flow profile ends up getting a lot less cash than they thought they were going to get because they weren't forecasting these negative events that happen to mining companies. A royalty company like Sandstorm, we get X percent of revenue. So when the mining company is up and running and we're getting 2% of their revenue, we're getting that 2%, 2%, 2%. If a bad event happens and the mine stops, our 2% goes to zero for those couple of months, but we don't lose any money. And because we've got a portfolio of royalties, the vast majority of our royalties are still paying. So our cash flow as a business is still high. It might drop a little bit when there's a negative event at one of the mines, then it comes right back up. And so we're always cash flow positive entities. It's way more stable and a way more safe investment, a safe way to play the gold cycle. Mm-hmm. And so that's one of the reasons I mentioned that towards the later ends of the cycles, I like owning royalty companies the most because we always have positive cash flows. The question is just how much positive is it? And so when you're towards the end of a gold bull market, which I don't think we're there anywhere near there yet, but we will get there eventually. Mm-hmm. What you start seeing is people investing in mining companies that have really high costs. So gold price is $1,850 today. There's a lot of companies out there, the all-in sustaining cost of producing gold is $1,300, $1,400, $1,500. If gold price drops $400, their cash flow goes to zero. If they have debt, they violate those debt covenants, they go bankrupt. As an equity investor, you lose 100% of your money in that scenario. If gold goes from $1,850 to $1,450, Sandstorm, I think, is still undervalued and our share price could be going up. So that's one of the reasons that's the method that I use.
Okay, now I want to talk about how those various stages of the gold cycle impact your operation, right? Because you're going to be doing a couple things based on what the market's doing. Before we get to that, though, I just want to touch real quick on your team a little bit, because from Wheaton, you pulled your co-founder, David Aaron, with you. He's now your senior exec VP. Talk to me about, you must have received some inspiration after having a front seat with one of the world's premier royalty companies being Wheaton Precious Metals that drove you to create Sandstorm. Was that the case?
Yeah, Wheaton Precious is a fantastic company with a fantastic management team, and having been part of that was a great experience. And at Sandstorm, we've built, I think, a similar culture and really high quality people, and we saw how to do it right, and we've been emulating that at Sandstorm and then trying to improve on it where we can. Okay,
now, we opened this up. I said, you've been really busy. Previous decade, I think you guys opened up in 2010. Company was founded 2008. 2010, you had 5 royalty agreements. Correct me if I'm wrong. A decade later, or 2019, 190, right? The significance of that is that you were hunting in a bear market when metal prices were cheap and deals were probably more available. It takes a lot of boldness to take those steps in a bear market. And so a couple of things. I want to touch on some of the highlights in the portfolio. And then I also want to understand how your focus might shift now in a resource bull market. But let's begin. That's rapid growth. That's sitting now at 201, I believe, agreements, correct? So what should investors focus on within those agreements? What are some of the highlights?
Yeah, so of those over 200 streams and royalties, not all are created equal, and some are worth a lot more than others. And so we've actually got a lot of resources on our webpage investors can go to start understanding what cash flow is coming from where. But we've got a number of streams and royalties that are the bulk of that cash flow that are coming in. We've got a presentation also on our website that outlines what are the more material contracts. One of the big pieces of our growth going forward, so over the next 2-3 years, we're expecting to double our production and double our free cash flow. One of the big pieces of that growth is an asset called Hod Maden in Turkey. It's one of the best, highest grade undeveloped gold assets in the entire world. It's an absolutely fantastic asset. We should be putting out a feasibility study here on it in the next few months. And so we're happy that that's part of the growth. But really that portfolio is just Sandstorm as a snapshot as at today. As you mentioned, in 2010, we had 5 streams and royalties. Today we have over 200. Fast forward another 10 years, we expect to have over 500, and we're just going to keep going.
Interesting. Okay, that kind of leads to my next question, because I might have made the assumption, Nolan, that you would go hunting in a bear market and then you would harvest in a bull market when metal prices are up. I mean, and I'm sure you're always looking at things. You're never going to be sitting dormant, just focusing on cash flow. But does that impact the strategy a little bit? I mean, how does your focus change now that we've entered a bull market? It's been quite a dramatic shift.
Yeah, I would say the way that I run the business in terms of investment philosophy over the cycle is similar to how I would manage my personal investment portfolio, which is the more late stage you go, the more you focus on producing assets that are cash flowing today, that are stable, long life assets, that if you are towards the end of the cycle and it comes off a little bit, that's okay. You're going to catch multiple cycles and you're still going to make lots of money on that deal. The things that we're probably investing less in dollar-wise right now is exploration. We find that at the bottom of the cycle, all of the small and junior companies, irrespective of how good their assets are, they get washed out. Companies with $100 million market caps drop to $5-10 million, and they can't even raise $1 million at the bottom of the cycle. And that's where we'll step in and we'll sweep up 10, 20, 30 royalties at a time and really grow the number of royalties at the bottom of the cycle. But I do believe that right now is still a good time to be investing in operating mines and buying royalties on things that are producing cash flow or will start writing us checks for cash flow as soon as we do the deal. I really do believe that things are lining up very well for gold to be revalued long term. The debasement of the US dollar and just the quantitative easing and money printing is just beginning to take hold. And the US is in such dire straits financially. It's absolutely incredible. I mean, they're functionally insolvent. And if they were any other nation on earth, they would already be bankrupt. The only reason they're not bankrupt is because they have the ability to print their reserve currency, and they're doing it in large amounts. And it is going to flow through into real asset prices. It's going to flow through to real estate. It's going to flow through to gold and silver. And so I believe that right now, the average analyst is using a long-term gold price of $1,550, which I think is insane. I think that the gold price 5-10 years out is going to be more like $2,500 an ounce to $3,000 an ounce. And I think it's going to stay there for an indefinite period of time and then continue to go higher after that just because of the devaluation of the US dollar. So we still are looking to invest our US dollars now, trade those US dollars out to buy in gold in the ground now. And so we are going to grow, we think.
Do you think, okay, I want to touch on a couple of things you said there just because it's come up in conversations recently. Do you think there's any potential that the US would actually revalue gold formally, reprice an ounce of gold? No,
it's too decentralized now. The US doesn't have enough power to do that. I don't think that would be successful.
Got it. Okay. No, thanks for sharing that. Okay. Now I want to touch on the future a little bit. So what could investors look forward to, call it near term, Nolan, 1 to 5 years when they're looking at Sandstorm?
Yeah, over the next, we'll say 1 year, I think we're going to accomplish a few things. The most two significant of which are, we do think we are going to get new deals here. So if you're an investor in Sandstorm, you'll get the benefit of the acquisitions that we make this year. We are cashed up and ready to go. We've got over probably $110 to $120 million US cash sitting on our balance sheet right now. We have access to $300 million of undrawn revolving lines of credit. So we've got that plus our cash flow this year, we'll have access to $500 million US in cash flow to make acquisitions this year. So I think that's the first thing that investors can look at. And then secondly, we think that we're not only going to have a feasibility study out on Hot Mountain, I think we're going to get the permits and start the long lead construction by the end of this year. So we'll have new large assets that come into our portfolio, and then one of our large assets in our portfolio, Hot Mountain, it's going to be put into construction. So we think it'll be a really good year for Sandstorm if we can accomplish those two things.
Yeah. Okay. So 100 million plus in cash, 300 million credit facility, in addition to cash flow, puts you at $500 million in available working capital to take to the market right now. That's a very strong position to be in. Talk to me about your ownership a little bit. I'd love to understand more about management ownership, insider ownership, et cetera.
Yeah, management owns a tremendous amount of the stock. So I had mentioned that 2/3 of my net worth is tied up in precious metals. The majority of that is tied up in Sandstorm. I own tens of millions of dollars of Sandstorm stock, and I can tell you that there's nothing that I think more about in terms of when I wake up in the morning every day. It's how do I add value to those shares.
I love that. And when I preach on this channel about focusing on the people, that's why, right? I want to focus on the CEO and the supporting cast, the other executives, the directors, the money behind the deal, because I want them to lose sleep over the operations, right? Exactly.
Absolutely. It's kind of funny, even in the investing that I do on the side, if it's a deal that, I've just heard of, but I got fairly excited about it and I invest some of my own personal money in it, it's very frustrating when you realize that represents maybe 1% of your overall portfolio. And even yet you own now more shares than the CEO of that company. Because he was a hired gun. He wasn't there when they started it up. He didn't get to buy cheap shares, and his net worth isn't particularly high. He owns a nice house, but still has a mortgage. And so he hasn't had the money to go buy shares, and he owns 0% of the company and really doesn't care if the share price goes up or down. He gets paid a salary, he gets a bonus, and the bigger he can make the company, the more money he's going to make year after year. So that CEO would care more about growing the company than they would about getting the share price up. And you get very disenfranchised very quickly investing in the mining space when you realize how little the CEOs on average care what their share price does. So one thing that we've done at Sandstorm is it's not just for me, that we've done this for our entire senior management team. People have to own multiples of their annual salaries in terms of shares. So the share price goes down, they're losing money. It's entirely possible that if our share price goes down, our management team is working for free effectively for the whole year, because they'll lose more money on their shares than they'll make in their salaries. And so that's an important philosophy. We want not just the CEO, we want everyone in the senior management to own lots of the stock.
I love that. Okay. Now to wrap up, I just want to touch on anybody else in the executive team that is notable, and one that comes to mind is Dave DeWitt, just because I'm a big fan of Pathway Capital and the work they do and a lot of the companies they put together. I think it's a real high integrity firm. Anybody else on the team, Nolan, that you want to mention?
Yeah, Dave DeWitt, Marcel de Groot, who's his partner at Pathway Capital. He's an advisor to us, and they're fantastic to have. Dave DeWitt, as you mentioned, he's actually our chairman, fantastic chairman to have. In the management team, we've got a really strong technical team. We've got Tom Brewington and Keith Laskowski that we poached from the International Finance Corporation years ago, and they head up our technical. We've got a really strong corporate development team. We're really pleased with the team we built here.
Okay, awesome, Nolan. It's been great hearing the story from you and introducing you to our audience, because we haven't had you on the show before. So this has been fun, and I'd love to do it again. Thanks so much for coming on.
Yeah, thanks for having me.